Hey, good morning. It is Tuesday morning before the market's opening, and I just want to kind of tell you I've been concerned about this market for a few days, maybe even a couple of weeks now, and I just don't see a lot of good things happening in this market right now. So I've been moving my positions mostly to cash, and I still have a couple of left out there, but I actually opened up some bearish positions, uh, you know, doing some put spreads or some covered puts, if you want to call them, on a company called DR Horton. And the housing industry is really taking it on the chin, at least as far as the charts. But I want to just kind of go over some of the things that I see on the chart. Now, this is my market timing system, and I teach this in my programs. But, it's right most of the time. It's right about 75–80% of the time. It's wrong, too. But, I use it to kind of give myself certainty. And I think in these markets, you have to have certainty. And so I'm looking at today. Now the market hasn't opened today. In fact, I think it's going to open up a little tiny bit today. But you can see here 4 days in a row of down, right? And so let's just kind of go through what the negative things are on this chart. This is the New York Stock Exchange index. Now you can look at any other index that you want. It's up to you. But I'm looking at a close below the 21-day moving average, right? These 4 days in a row of down. The volume, and I'll show you on another chart on the QQQ, is up. And so this is a serious beginning to a sell-off. Now, I'm showing you, this is a daily chart, and you can see the market, I call it yellow, red, and green, right? So when it's green, that means like the wind is behind you and it's filling up your sails, and it's a lot easier to make money in these markets, right, than it is in these other red markets. And I can pull this back and show you. So see how it's red here, it went red, that little dot there, and see how from that dot it went down a lot. And then finally, when it went green a lot, right? So that's kind of how I look at this. And this action right now is the beginning. It's the second day, or now beginning the third day of a yellow market, which means that we could go red tomorrow. When markets hit red, that means you're basically got the wind in your face, you're swimming upstream. It's hard to make money unless you're a bear. And, even though we sell covered calls to protect the portfolio, it doesn't protect you all the way down. Think about it. Let's say you're getting $5 a week in juice, but your stock is going down $20 a week. Well, eventually, hopefully, it'll come back if you've got a good stock, but still, you're down $15 a week, right? If it does it 2 weeks in a row, you're down $30 in 2 weeks. That messes with your head. This game is a mindset game, okay? It's not always a game that basically says, it's easy to make money, because it's really hard to make money. It's a grind when the markets turn red. So what I'm trying to do is give you a little warning that there's a red market, or at least a yellow market right now, that you got to be careful of. Let me show you another screen here. Let me have to minimize this one. I'll show you this screen. This is the QQQ. Now, I've drawn a couple of lines on the QQQ here, and you can see that there's this short-term trend line that was moving up, and yesterday it closed below it. Now, when you get a close at the bottom of a daily range, look at that. 1 day, 2 days in a row on volume, high volume. That's telling you that the sellers are coming out and selling into the end of the day, which should be a warning for you, right? Because look at the opposite, right? When the little tick mark there is at the top of the candle, and you get good volume, look at what happens. Things just keep going up. Look at top, 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 even on a down day, slightly down day. That's the bottom, top, top, top. And the markets go up when they're at the top. But the same thing happens when they're on their bottoms, right? So now we got 3-4 days in a row here on the QQQ, 3 at least anyway, and it's closing at the bottom on volume. That should tell you something. Okay. Now these charts aren't always right, and a lot of this is reading the tea leaves and all that kind of stuff. And I'm not trying to predict the market. I'm trying to play the probabilities. I'm just telling you, I've seen like a million charts in my life, and when you start to see them set up, they repeat. These patterns repeat, and if you don't recognize them, then you get sucked into the downdrafts, right? What I'm trying to do is help you avoid the downdraft. Now, the reason we do that is because you can keep your powder dry if you move to cash. And if you move to cash and you have the cash sitting there, when the market's green again and your stock is moving back up, then you can get back in. But right now, you're basically going to be fighting the market. And you can say, Mark, if you just hold it for a while, it'll come back. Yeah, probably. I mean, if you pick the right stock, that's great. But a lot of times it takes a long time to come back, and that really messes with your head. And it's sometimes better to just go play golf and go to cash, right? And wait until the market comes back. So taking a look, that's a breach of that little short-term trend, which puts this longer or medium-term trend into play. These swing points here connect. And so, this stock could be going down to this spot right in here, 509, right? Not stock, but ETF, 509. And right now it's at 519. Well, that's not a big move. That's like 1 or 2 days if we get another couple down days. But this 200-day moving average is now in play, okay? And that makes this whole uptrend suspicious, okay? Because if we start to break below this swing point at 500, right? And then we head to this 200, it'll probably do what it did, several months ago back in August. It'll probably touch the 200-day moving average, test it, bounce off it on the same day, and then resume an uptrend. But sometimes, and maybe once every 12 to 18 months, you get a breach of the 200-day moving average, and it stays below it for a while. And then even more selling happens, okay? So I'm just trying to get you to be aware that, maybe cash is a consideration today. I'm going to pull up the SPY, and you're going to see it's a very similar thing. The SPY is below the 50-day moving average, right? That's bad. Not a lot of good things happen below the 50-day moving average. Yes, 2 days ago we had a close at the 50-day moving average on volume, and then yesterday we continued the sell-off, and now it's below. Doesn't look like a big deal yet, okay? And it may not. Maybe just a little bounce. But I always respect these opportunities at the beginning, because if you can kill the monster while it's small, right? If you have a small loss, maybe it's better to take that loss now than to wait and have it become a bigger loss, and then you have a lot more time and you got to do a lot more things to make it recover. Just consider going to cash. These markets might go down for 3 or 4 more days. They might go down for 3 or 4 more months. But when they go down, it's time. I tell all my students, respect the red. We're not red yet. We're about to be red if we continue this action. But if you don't respect the red, then it's like, let's say you're on a path. Last analogy for you, okay? You're on a path and you're trying to get to a destination. But somehow you've dug a hole in front of that path. Well, you can't take a step into the hole or you'll fall into the hole. You have to fill the hole back in to continue on your journey. Isn't it better not to dig the hole in the first place? That's the experience that I've got. Doesn't always work. It all sounds great in hindsight. I'm trying to do a little foresight for you now to tell you to be careful about what's going on in this market. Like I always say to my students, you'd rather be out of the market wishing you were in than in the market wishing you were out. Have a great day, everybody. Be careful. Bye. Hey, it's Mark Yagi, and if you haven't subscribed to this channel, please do that right now. That would be a great favor to me, and plus it helps me get this material out to a lot of other people that might need it. I've got a little bit of a movement going on here, and I want to try to change the world one person at a time, showing them that you can make safe, reliable income from the stock market. And plus it helps to grow the channel a little bit. Also, if you would give me a thumbs up on the video and like it, great. If you don't like it, give me a thumbs down, that's cool. But just tell me why you don't like it so I can get better. And then hit the notification bell so you can get these videos as soon as they come out, because a lot of times this is timely information and you want to get that information before it gets stale. The last thing is to join my free Insider Tips newsletter. There's a link below and you get everything in one spot. You get breaking news and analysis also. So that would be great if you could do that too. See you soon.